Trying to save money on taxes, but not sure if you're risking an audit? We'll show you the most common mistakes physicians make and how to avoid them. Enpo Tu is a founding leader at My Financial Coach, where he helped build the company from the ground up 2018. As both a financial coach and the architect behind My Financial Coach's operations, Enpo ensures the coaches under his leadership deliver the high standards of advice-only financial planning that over 400 medical families rely on today. He's also one of the company's key public voices, hosting webinars, publishing educational content, answering physicians' questions at conferences, and more. But before we get to Enpo Tu, here's a word from our sponsors. Hey there, it's Brad. As someone who's passionate about podcasting, I've always thought there should be more support for physicians who want to share their stories and expertise. That's why we're launching Doctor Podcast Network.
We're bringing together a community of physician podcasters with one goal in mind: to provide the tools, connections, and resources you need to grow your show. So whether you've been podcasting for a while or maybe you're just starting, we've designed this network to support you every step of the way, and we're going to help each other rise, not compete.
If this sounds like something you'd benefit from, we'd love for you to join us as we get closer to launch. So you can sign up at drpodcastnetwork.co for early access. Stay tuned for more details in the coming weeks. Really looking forward to what we can create together. Doctor Podcast Network, where doctors podcast.
Doctor Podcast Network, where doctors podcast.
Doctor Podcast Network, where doctors podcast.
You're listening to Succeed in Medicine, the show for practicing physicians who want to master the parts of their career and life that med school never prepared us for. From interpersonal skills to career navigation to the essential information every physician needs. I'm Dr. Bradley Block, and in every episode, we bring you brass tacks advice and immediately applicable insights from world-class experts, so you can feel prepared wherever your MD takes you and build a life in medicine that's sustainable, rewarding, and actually worth all those years of sacrifice. Enpo Tu of My Financial Coach, thank you so much for being on the podcast.
Brad, thank you so much for having me. I'm glad to be on and to chat with you today.
So let's dive right into it. We're going to be talking a lot about taxes, and considering the number under this current administration, the number of IRS auditors has dropped by almost a third. What do you think about, just more broadly speaking, should we be a little more liberal about deductions given that fact?
You know, it's very interesting because a lot of doctors have different business models, but I think just as a trend, we've been seeing a lot start migrating over into the hospital systems, into more of the employed network systems. So when you say, hey, should we be a little bit more liberal? I think back in the day, there were certainly a lot of physicians where they own their own practice. They might be able to expense a few dinners for more than just necessarily the business stuff. But when you're talking about a W-2 situation where you're working for a company, I think that the number of deductions that you have that will really make a difference above and beyond the standard deduction starts to drop dramatically. I am not a CPA by trade. I am a CFP, but we oftentimes see a lot of our clients, they come to us and they tell us, hey, you know, I think I'm saving taxes with my CPA. And quite frankly, how do you know? How do you know that your CPA is saving you a lot on taxes? And regardless of whether or not the IRS has a lot of staffers, not a lot of staffers, I think the question really becomes, do you have a good CPA who's going to A, be willing to deal with the IRS should something happen, B, actively looking for these opportunities for you to save taxes?
Yeah.
And by the way, they have to check the first two boxes. And C is, hey, if they actually are able to make an argument, are they going to charge you for it if it comes time for them to go and argue in front of the IRS?
Right. So you're saying if you get audited, are they going to go to bat for you? Which I feel like is part of their job, right? Like if they're the ones that are reviewing your tax statement and preparing it, right? Isn't that part of what they do? Should you be audited?
You know, that's a really great question. There is no uniform law that says that the person that writes or that signs off has to represent you pro bono.
Oh, no, not pro bono, because their time has value, right?
Sure.
No, not pro bono, but they're going to have to defend their work, right? Because it's still their work.
Well, here's the thing, right? Do you trust that they would be able to do so well and to the point where, remember, you're the one who is oftentimes doing things and self-reporting to your CPA.
Yeah,
and it's
absolutely.
a relationship where you tell them things, they make representations. And so if you think about what it is that you are doing from a day to day, there are a lot of common things that we see all the time where they think their CPA is signing off on something, but their CPA doesn't always know what is going on. I'll give you a very good example. So we see this all the time. A lot of the docs that we work with, they will read an article on backdoor Roths. Very common strategy that a lot of docs go through. They say, okay, well, I make too much money. What I'd like to do is I'd like to still contribute to a Roth IRA, but I'm phased out of it because of my income. So they stew on this for a while. And I don't know about you, but I swear the search engines, they literally can mind read my frustrations and serve me up an article or serve me up a product or service that is able to address my frustrations. It's almost like this weird mind reading. And they're going to stumble eventually on an article that says, hey, you can do a backdoor Roth IRA. And they explain how to do it. Like, hey, open up this IRA that is taxable and then convert it instantly into a Roth IRA. Hey, guess what? Boom, you're able to make a Roth IRA contribution after all. And they zero in on those statements. Now, the rest of the article goes into, well, hey, here's all these common pitfalls. Here's all these other things you may want to consider. But really, you just want to read what you want to read. And so you zero in on that and you do these backdoor Roths. You tell your CPA. And your CPA is going to sign off on it because they're like, okay, whatever, I don't really care. I don't know what's going on with your balance sheet. But here's the trick, right? If the IRS is going to say, hey, you're a smart dude, you must be doing these backdoor Roths because you read an article. That's great. I noticed that you have a SEP IRA open here and you have an IRA open here. So really what you're doing is a Roth conversion on your taxable IRAs. So unless someone knows your balance sheet like the back of your own hand.
Hold on. Let's just assume for a second that I'd have no idea what you're talking about, right?
Okay.
Backdoor Roth is basically once you make an X amount of money, and what is it, $150,000 a year where you can't do...
It depends if you're married, filing jointly, or if you're single, but let's just assume most of your listeners are going to make way beyond that.
Yeah. And so that means you can't contribute to a Roth IRA, but what you can do is you can contribute to an IRA, and every year they change the amount, but I think right now it's like $6,000, obviously Google that, and you can contribute to an IRA, and then you can convert to a Roth IRA, which means you pay taxes on it now, and then it grows tax-free, right? That's what the difference between...
And then when you take it out, it's also tax-free. That's very important.
That's what I mean. Once you pay the money, you pay the taxes up front, and then when it grows and you withdraw, you don't have to pay taxes on it anymore, right? Okay. But you mentioned a SEP, right? Let's assume we don't know what that is. What is a SEP IRA?
So a SEP IRA is, let's say you have a few people listening here that have locums work or they have 1099 income.
Yeah.
And they have a good CPA, and the CPA goes, hey, rather than get taxed on this money, why don't you throw it into a retirement account? Let that grow tax-free. And, you know, that's great. You change CPAs. A new CPA doesn't know you have that SEP IRA open.
Yeah.
Or let's say you move employers, and instead of leaving your money inside of the 403b, 401k, you roll it into an IRA.
Yeah.
Okay. So now that's hanging out there. And that is all pre-tax money. You've never paid taxes on that SEP IRA. You've never paid taxes on that IRA. But because you have that open, the IRS is now going to say, well, actually, what you did was, while you did do this neat little trick over here with this backdoor Roth, you have all these SEP IRAs open over here. And we don't know, and your CPA has no idea what your balance sheet looks like. Some of them do ask, but not all of them. And if you have all these assets hanging out over here, the IRS is going to go back and say, actually, because at any point you can convert your IRA into a Roth. They're going to look at it and go, okay, you may have done this backdoor Roth on this small portion. Let's say it's the $7,000 for 2025. Okay, great. But now over here, where you have the large portion of your money hanging out in the not taxed yet IRAs, SEP IRAs. Well, actually that portion, that all is converted. So if you were to think about, let's say you have $700,000 here, $7,000 here, well, 90% is now going to be considered a conversion and only 10% is actually your backdoor Roth.
But that's if they bring it all over to the Roth IRA, not if they just leave it there. So even though you're separating these two things out, you're going to get dinged for it. I don't understand, because shouldn't you be able to have an IRA that grows that you'll have to take taxes out at the end, right? When you withdraw it, and you can still have a Roth IRA? Can't you have both of those things simultaneously?
You can, absolutely. But when you're doing a backdoor Roth, you can't have a SEP or an IRA that is pre-tax, or else they're going to make this rule work against you.
So what you're saying is you can't do the backdoor Roth if you aren't converting everything, and you can only convert a certain amount per year.
So here's the thing, right? I'm saying that you're probably going to do the backdoor Roth in the way that it was prescribed and written in all these articles.
Yeah.
It's just that rather than it being purely a, hey, let me convert some little bits over.
Yeah.
Instead, what's going to happen is they're going to just consider part of that as a conversion. So you convert $7,000 into a Roth. Some of it's going to go into pre-tax bucket, let's say 90% of it. And then 10% of it's going to be from that after-tax IRA that you've already paid taxes into, because the IRS is essentially making the argument of, well, you actually have to look at all of your IRAs when you're doing the backdoor Roth method. So a lot of those articles actually do mention that, but because, you know, everyone's busy, they're kind of zeroing in on what they want to read. They don't really put it together that, okay, well, I have a SEP IRA, I have an IRA. And one way around it that some people have done is they've taken their IRAs, their SEP IRAs, and put it into their employer 401ks or created their own solo Ks, and then done Roth conversions. But those are some things where, hey, you're trying to get your tax house in order. You're allowed to do all of this stuff by following the rules, and you're allowed to do it. But because there are these little things that your CPA would not know, even if they sign off on it, they're technically doing it in a way that is not accurate because they just don't know your situation.
Yeah, but aren't you handing over all of this financial information to them when they're doing your taxes?
Well, let's think through the documents that you're handing over. Right?
Yeah.
You're handing over your W-2s, you're handing over your 1099s, you're handing over maybe your expenses, you're handing over. At no point, unless your CPA does differently, are you handing over or forced to hand over a full accounting of all of your assets, personal assets. If you're a business, you're going to show your CPA your inventory, you're going to show them your receivables and whatnot. But if you're just a regular W-2 person, like what's the likelihood that you're going to tell your CPA, oh, by the way, I have 2 cars, I have, 2 rental property, other than if they're depreciating it for you and whatnot.
Yeah.
But, is it normal for you to tell your CPA how much money you have in your money market, your bank accounts, exactly what you have inside your 401k, 403b, SEP IRAs? Yeah. You may not even know what you have.
Okay. So what you're saying is if we are not handing over that information, then we should be, because that gives them an opportunity to review it to make sure that these little things don't happen.
Are you paying them enough for them to do that for you, though? Because a lot of people, for a certain point, they don't want to necessarily pay a CPA any more than they have to.
Yeah.
And a lot of CPAs are either billing hourly, or some of them do a good job, and they're going to do a good job for you. But how do you know? It always goes back to, well, how much do they really know? I've actually interviewed a lot of financial professionals that physicians have accrued throughout their lives. They may have a really good insurance agent, a so-so CPA, and a terrible investment manager. They may have a really great estate planning attorney. They may have a so-so tax person.
Yeah.
And they may not actually even have an insurance or an investment person to even tell them any of these things. And at the same time, whose job is it? If you have all of these, if I'm your CPA and you already have an investment advisor and they're not coordinating with me and telling me these things, I'm going to presume that they're going to guide you right on this transaction. But if your investment manager doesn't even know that rule and that you have an IRA just hanging out somewhere, because you don't trust your investment advisor enough to tell them that. Because let's be honest, you're afraid that they're going to reach into your pockets. Are they helping you retire? Are they helping themselves retire? You got to put up a little bit of barrier and guard sometimes, especially when you're first working with someone. But then if they tell you, hey, why don't you do some backdoor Roths? Let me just help you with that. And you say yes, and you start doing it and no one's talking to anyone, then you could be doing your backdoor Roths wrong for years and you don't even know that. I know that we're using this as a very big example, but that's just something I see very often because there's a lot of articles floating out there about backdoor Roths.
Yeah, that's really interesting. I think we should move on from the backdoor Roth topic and let's talk about some other ways that physicians can save on their taxes, right? That's something that you wanted to discuss today. So I think, we'd be remiss to spend more time on the backdoor Roth without discussing other ways that we can save on taxes.
Sure, absolutely. And I think that's probably future taxes.
Yeah.
A lot of our physicians know that they probably are going to pay a lot of taxes throughout their whole lifetime, but a lot of them really hate paying taxes in the here and now, today. And they're right to do so probably, because when you run out the tax projections, their highest earning years are when they need money the most to pay down liabilities, to build up assets. And so they're getting taxed the highest. So they're always trying to figure out ways of, hey, how can I lower my taxes this year? How can I lower my taxes this year? And I find that a lot of physicians are smart and they all kind of triangulate on similar solutions. It's probably why 9 out of 10 dentists recommend leading brand toothpaste.
Yeah.
So my guess is that most, if not all of your listeners have heard some variation of this statement. I buy rental properties because it helps me save on taxes. And it also allows me passive income and allows me to participate in the growth of something that I can tangibly feel and have control of.
You spent years learning how to save lives, but no one taught you how to secure your own. When you work one-on-one with a CFP professional financial coach, you get a blueprint tailored for the long game of your complex situation. At My Financial Coach, they help physicians choose the best strategy to optimize your annuities and investments, implement tax-saving strategies, and tackle debt like your student loans or mortgage while refining your path to retirement. Save up for that boat, a child's college or wedding, or even a vacation home. Plan ahead for the impacts of the unexpected and understand how much life insurance you actually need. Project how getting married, raising children, or taking care of an aging parent affects the progress towards your goals. Advice-only financial planning through a fixed monthly subscription, not commissions, to keep planning unbiased and in your best interest. A financial plan isn't just about your money, it's about your future. Visit myfinancialcoach.com/physician's guide to doctoring to meet with a financial coach and find out if concierge financial planning is right for you. Again, myfinancialcoach.com/physician's guide to doctoring. Yes, there's lots of that online. There is like real estate, the affinity of physicians in real estate seems to be very high. There's also the fear of missing out, right? You see all these other doctors investing in multifamily, and I've got a bunch of episodes on it, right? All these tax advantages to doing it. And it makes sense, right? Who wrote the tax laws? Well, the wealthy landowners wrote the tax laws. So of course they're going to write them in such a way, right? This big, beautiful, or whatever you want to call it, bill that came out, this 100% depreciation. You could rapidly depreciate the value of the home or the value of the property so that you can then harvest that income for then more investments. So there are really a lot of advantages because they're the ones that write the laws.
And I think that in general, all of those articles and all of those statements are right. The only question is it right for you?
Yeah, I looked into the whole apartment building, multifamily. I just couldn't wrap my head around it. I wasn't interested in it. It just seemed like figuring out what the right deal was just a lot of work. And I have investments with other people. And it just, in the future, now I know it's not for me. It's worked for a lot of my colleagues. But like you said, is it for you? For me, not anymore.
Well, let's unpack that, because I actually have a lot of clients who invest in rental properties, and we're not actually in the business of telling people not to. In fact, whatever our clients want to do, we tend to try to help them do it better. But how we do that is by being very honest with what a rental property is versus what it isn't. So let's unwrap that. When someone says, I want to invest in rental properties because I want to lower my taxes, the question is, when are they lowering their taxes and how are they lowering their taxes?
Yeah.
And how and when is usually, hopefully this year, next year, and in the next few years, and hopefully throughout my whole life. And that is a promise of rental properties. But if you think about it, rental properties are not just you deducting taxes, but hopefully in a lot of people's mind, it's also you bringing in passive income. And these two things are at odds with each other, because if you're adding more income, then it's top marginal. So you're already, let's say, being taxed at the top 37% marginal. Let's say you don't have state tax. Then you already are starting out with 37% less money, unless you start finding ways to lower your taxable income using all these deductions. So a lot of the times when people say, I buy rental properties to lower my taxes, you're also increasing your taxes by bringing in rental income. And quite frankly, it sounds great. Like, hey, I'm bringing in income and I'm lowering my taxes, when that's not all you should be considering. So if I were to think of it that way, well, I'm paying back the bank this money I owe the bank. I'm writing off the depreciation, the interest, and all this stuff. So it almost feels like, especially after I start fixing the windows, fixing all sorts of things that go wrong with this rental property, it kind of just feels like I'm creating a forced savings plan.
What do you mean? What you're saying is you're just building this asset of this building. So instead of your money being in something liquid like the stock market, you're in something illiquid like a building.
Sure. And I think that's one of the things, that you're building up this asset. And regardless of when your timeline is for selling it, which is tomorrow, the next day, sure, it's not going to be as liquid as a stock, but some people don't want it to be as liquid as a stock. They want to build up something over time.
Right.
But what's going to end up happening is, how are you going to take money from this asset in the future? Because you got to think, at some point, you're going to pay off that mortgage. In fact, at some point, once you start running out of depreciation, start running out of all the interest payments that make sense, it's all income. And some people say, hey, that's actually a great thing. I want this to be a paid off rental property. I get paid. But now you've lost all the taxable advantages of it, unless you double down and you roll that over by a 1031 exchange, which is you promising Uncle Sam you'll pay everything you owe in the future. But for now, you're going to buy another rental property and restart the same cycle.
So a 1031 exchange, you're basically kicking the can. So
Yes.
Now you've got all this taxable income because now you've sold your investment property, but you use that money to buy your next investment property. They say, okay, fine. As long as you do that, you don't have to pay taxes now, and you're kicking the can. Now, eventually, unless you die first, like Uncle Sam is going to come calling, and you will need to. But what you're saying is you're also using all of that money in the meantime to make more money. So the taxes you're paying later, when you don't need the income as much because you're not building your wealth anymore.
And I think you're basically constantly creating this asset that keeps getting bigger and bigger and bigger. The tax benefits of it may or may not be there. But what I'm saying is you have to keep your eye on it, because I think a lot of people, they get a narrative in their mind. And then until they actually look at the numbers and look to see, hey, what is my exit strategy? Why am I doing all this? You have to figure that doesn't matter what you're telling yourself the reason is. You have to see if it's actually happening. And if you go back to my earlier statement of, hey, why is it that people buy rental properties and they will say, well, it's great for my taxes. It creates passive income. It creates the ability for me to, at some point sell this, make a bunch of money potentially. All of those need to be measurable in any investment you make, whether it's putting $1 in a 401k, buying a stock, buying a bond. And I oftentimes think that if my clients were to really think about buying properties like they would a mutual fund or an ETF, they would probably get better results from buying their rental properties. So picture, if you will,
But one is considerably more work than the other, right? And the question is, are you interested? And is that how you want to spend your time?
Well, it's a good question because, ultimately it's not like the listeners here are going to drive for Uber and make as their null hypothesis. Because think about some of the people that are putting in, the muscle work to fix up their home, fix up their rental.
Right. No. But the question is, do you want to go networking and finding rental properties and seeing if this is the one right for you? And you want to go to a syndication and meet with all these people? Or do you want to just put your money in the market and go hang out with your friends?
Well, I think if it weren't for the fact that even if you were going to hustle, there's probably an easier way for you to hustle because you have a medical degree and there's plenty of openings where you can do locums work, where you can actually, if you're totally locked in and you're going to maximize your time in dollars, is it really going to be you going out there and fixing toilets, dealing with renters, or is it going to be you going out there and taking locums work and exploring some of the things that are going to make you money?
Yeah, that's really interesting because there's a whole empire of people who will tell you that the right thing is to look into real estate. And they've been very successful and they don't have to work as doctors anymore. And they've done very well, right? And so it seems really tempting to spend your time doing that. But one of the things that we're not seeing is all the people that haven't been successful at it, all the people that lost a bunch of money. And so, there's a certain amount of survivorship bias to it. And it just comes down to risk and reward and time and interest. And if this stuff is really interesting to you, then go for it. But I also think there's a bunch of physicians out there that feel like because they're not on the real estate train, then they're missing out. And the answer is, I think, from what we're discussing, if it's not right for you, it's not right for you. Yes, there's plenty of ways that you can make more money by being a doctor and doing your doctor thing. The argument against it is you're trading time for money. And when you have passive income, you're not trading time for money. But at some point, it did require time in order to gain the expertise and do the networking and decide what was right for you. And so, is it right for you? But I do want to move on to a different topic. And that is, one of the things that you do at My Financial Coach is you hook people up with some of the experts that you were referring to earlier, right? Insurance and accounting and all the other things that you need to do to get your financial house in order. And so a lot of the times that starts with your financial advisor. And so, a question that I wanted to ask you is, what are some of the questions that we should ask of a financial advisor to know if they are competent specifically with physician clients? How are we going to figure this out?
So the way that I see the financial services industry as someone who's kind of on the inside looking out as well as in, I think of it as this. A lot of people who are in the medical industry, they know what field of medicine they're in. They'll be very honest with you. They'll say, well, I'm an oncologist, I'm a radiologist, this is my expertise, this is the area I work in.
Yeah.
In the area of financial services, there is certainly a level of everyone saying they're in financial primary care, but they don't really do financial primary care. They're going around and they're doing financial surgery. And if you think about what financial surgery is, it's, things that you can bill the insurance companies a lot of money for. And that's usually a profit. Sorry,
I wouldn't be throwing the surgery colleagues under the bus. I think you want to clarify what you're saying. What you're saying is, if I may rephrase, there's conflict of interest. There's conflict of interest in the financial services industries where they will make money by selling you stuff, right? In the same way that physicians can bill for procedures, they can bill by performing certain services or selling you certain things. And so there's going to be a conflict of interest there. And so you want to make sure that they're in a position where they don't have a conflict of interest. And so how do we do that?
Well, as long as you understand that someone on the inside kind of will look at this, like, hey, what exactly are you looking for when you're looking for competence? It's not necessarily that nobody needs surgeries or nobody needs primary care, no one needs oncology. It's more like, hey, when do you need it and why? And as you're looking through the various different professionals out there, as someone who's looking for a financial person, you have to be very clear about what type of person you're looking for. And it could be like, hey, I just need someone who is able to help me shop out my homeowner's insurance and help me figure out exactly how much I need to borrow for my mortgage. Okay, well, then you're looking for this type of financial professional, a mortgage broker. You're looking for a property and casualty agent. I think that financial planning gets thrown out a lot as what they're doing for you.
Right.
But
So people use that term, and really that's not what they do. So they're operating out of their wheelhouse by using a term where there's not really, although like you said, you're a CFP, right? You're a certified financial planner. So there is a legal designation there, right? And so is that something that we should be looking for?
Well, I think that a CFP is good because you have to pass a very difficult exam, which is very extensive, goes into a lot of different topics. But if you are a CFP, but the focus, because the CFP board does allow you to just do one area of financial planning. You don't always have to do comprehensive. But then again, not everyone wants comprehensive planning. And I think that's something that when you're looking for a financial planner, be very clear as to what you're looking for. If you're looking for very much a specific person that helps you with your investments and that's all they do for you, then be clear that's what you're looking for.
Right.
Or if you're looking for someone who just is helping you look at your overall picture, look at all of the various different things that make a difference to your financial life, kind of helps aggregate the data and understand it, then you need to understand, hey, how am I compensating you?
Yeah.
Because that's a lot of work. And that's something that is included as a service under the presumption that you do other things with them in some cases, or at other times, you're purchasing it directly from them, where you're purchasing their advice.
And I think that ties into what you were saying earlier about an accountant, right? Like if you're doing certain things with your taxes and this is not being reviewed by your accountant, you have to make sure that you have paid them to review all of the things that you are doing with regards to the taxes if you need that advice. And so we might be assuming that it's within the scope of the work and it might be outside the scope of the work. So I think it ties in for both of them. And you are with My Financial Coach, right? And we're talking about financial planners. Now we're talking about financial coaches. And so where's the distinction here? What is a financial coach?
Yeah. So I think for us at My Financial Coach, we are what we would call a membership fee based financial planning company. Someone pays us a membership fee. We set them up with their own certified financial planner who is a salaried individual. They don't have an ability to offer you life insurance, mutual funds, disability. They're your concierge primary financial care. They just look at your finances, try to see the areas that may have become more complex over time, because complexity develops over time. And I think that's where a lot of the times, if there's not someone that's keeping an eye on all this growing complexity, different people are not talking to the right people. Things that are big issues are under the surface, and things that you think are big issues are actually non-issues because you've already addressed it in other ways. So for us, I would say our financial coaches are certified financial planners who have a vested interest in your improved financial outcome. And I think it's time for our industry to go beyond the fiduciary standard, the fee-only conversation, and really offer our advice as the product and service. If you're going to go out there and say, hey, I perform financial primary care.
Yeah. Okay. That makes a lot of sense. And so is there anything else you'd like to tell us about My Financial Coach?
You know, My Financial Coach, just to share a little bit of our historiography, it was started by our CEO. He very much believed, as he's been very successful throughout his career, worked with a number of financial professionals. Hey, are they working on their retirement or mine? Because there's a certain level of opacity. Like, I don't know how they're getting paid. I don't know if they're incentivized to make sure I do better. You know, what exactly is going on? And he works in the financial services industry for his whole life. And I think that goes to show you that there's just a lot of things that when you talk about someone who is in financial services, it covers a very wide range. Just like in medicine, it covers a very wide range. You need to get very much focused on how is it that I'm going to improve my situation by working with this individual. And it can't just be because you like them or they seem to be saying the right things. It comes down to what is the deliverable? What is it that you're getting out of the work that you're contracting with them? And sometimes you don't want it as a package. Sometimes you just want it piecemeal.
Yeah.
And so I think that is something that we do here at My Financial Coach very well. We work with over 400 plus physician families where we're always looking to see what are the best things out there, what are good financial outcomes, what are okay so-so, and what are some of the bad habits that some people have picked up, and how do you make better habits to get to better financial outcomes?
And so if people want to learn more, if they want to find out if My Financial Coach is right for them, where do we learn more about you and where do we learn more about your company?
We are very transparent with our pricing. All of our information is online. You can see it on www.myfinancialcoach.com. Up in the tabs, you can see everything that we do in terms of the services we offer, as well as learn more about me under the About Us page and under our team.
And so last time you were wearing a bow tie and a vest, and this time bow tie and suspenders. And you mentioned something specific about your clothing that you wear to work every day. So just so people get a better picture about who you are, what was it that you shared with me last time?
So people are actually very shocked when I'm not at work and they just bump into me in the street. They go, hey, it's so weird. I thought that you always love wearing a bow tie and a vest and a suit. And the way I see it, this is my profession. This is my job. Just like how when doctors go into the office, they wear their white lab coat. And when they get home, they take it off their own person. They're doing life, they're living life. I'm the same way. Whenever I show up, I'm putting on the bow tie and wearing the suspenders or vest, because ultimately I treat this as a very important job. This is my job. This is my craft. And I certainly want to turn it off when I go home. I don't want to necessarily be a walking billboard for everything that I do every day, but I do want to always put my best foot forward whenever I'm in front of our clients.
Well, fantastic. So again, it's myfinancialcoach.com. Enpo Tu, thank you so much for your time.
Absolutely. Thank you very much, Brad.
Thanks for listening. I have a favor to ask. You listened to the episode until the end, which means either you fell asleep or you really liked the episode. So please write us a 5-star review, take a screenshot, and email it to me so I can send you a quick guide on how to earn patient trust in 20 seconds or less. Email me at brad@physiciansguidetodoctoring.com and feel free to suggest a topic or guest. I take your requests seriously. The views expressed on this episode are those of the interviewer and the interviewee and do not represent the views of their employer or even their significant other. Even though the magic of podcasting makes it sound like I'm talking directly to you, this is not a doctor-patient relationship, and this is not medical advice, or financial advice, or legal advice, or really any advice. Thanks again for listening to Succeed in Medicine.